Welcome back. Let's get straight to the management of Genus Power. In fact, they've won big orders, but the street would like to know what's the execution trajectory going ahead. Mr. Jitendra Kumar Agarwal, who's the joint managing director of the company, joins us on the show. Hi, Mr. Agarwal. Good morning, and thanks so much for joining in. Well, could you tell us for this year, what kind of a revenue are you looking at? I'm looking at the first half of the year. You've done around 260 crores on a quarterly basis. To achieve 1,200 crores plus, you'll have to do more than 350 crores on a quarterly basis. So what do you end FY24 with? What about FY25? And also margins, you were talking about mid-teens. Do you stick to that?
So, good morning, everyone. I've been maintaining a guidance of 1,200 to 1,300 crores for this financial year. We continue to maintain the same. And you will see most of the orders are decided in the month of Jan, Feb, March, and then a lot of orders are decided in the last 2 quarters. You have to understand one simple thing in RDSS tenders. Whenever the LOA is given, it takes at least 2 months for the contract agreement and at least 5 to 6 months for the things to come on the ground. It is a minimum 7 to 8 months gestation period when the numbers start coming up. So a lot of orders has been decided in the market for us, and you will see revenues growing up quarter on quarter. Quarter 3 will be better than the quarter 2. Quarter 4 will be even better than the quarter 3. And so I very confidently maintain the guidance of 1,200. So I don't see any challenge in that.
Mr. Agarwal, 12 to 1,300 this year. Next year, what will it be? And margins are mid-teens, that's around 15%?
So we maintain, because the margins will also improve, because a lot of investment, you have to understand one simple thing. In last 6 months, a lot of investment has happened on the ground level in terms of recruitment of people, in terms of doing the surveys in the field. Because when you are doing an order book of almost 20,000 crores, a lot of work has happened in last 6 to 12 months on the ground, which is an investment. You will start seeing the revenues in quarter 4, then from next financial years, then automatically the margins will improve dramatically.
So let's talk about the...
Yeah.
Right. So let's talk about the next financial year itself. You are confident of 12 to 1,300 crores this year, which implies a revenue run rate of almost 350 to 400 crores per quarter for the next 2 quarters. But given the order backlog that you have, and as you just explained, the gestation period of 7 to 8 months after you win orders, there have been a lot of orders that you won. They will go into execution FY25 onwards, right? So what is your quarterly run rate in FY25? What is it that we can expect? And margins around mid-teens, like Nigel pointed out, possible, right?
So definitely margins of mid-teens is very much possible, and we expect we can even do better. And when it comes to numbers quarter on quarter, they will only improve. And I don't want to give any guidance on the particular number, but I've been saying in the past also, you will see a significant improvement in the numbers and multi-fold jump from next financial year onwards.
So would it be fair to then assume that between 500 to 700 crores per quarter is doable for you on a run rate basis? Or would it be more than that when you say multifold? Just...
So definitely doable.
Okay, definitely doable.
So
that means more than that is possible as well.
So at least 2,000 crores for FY25. We just annualize at 500 crores at least. I'm not talking about 700. So at least 2,000 plus crores is what you'll deliver. Do you want to give us a number? Should we work with 2,000 to 2,500 crores for FY25?
I don't want to speak on the numbers, and I'm very shy on that. But as I've been saying, there will be a good growth, multifold, and whatever the numbers you are thinking are definitely doable and even better.
Okay, all right. The big other point was the JV that you announced with GIC. That's good because it helps your receivables position as well, going by the business dynamics. So 2-part question here. You need to put in close to around 1,700-1,800 crores approximately going on that commitment. How do you fund this? There's a trust that holds close to around 10% in the company. So when that 10% gets sold, will it come back to the company? I just wanted some clarity on that. And is there any plans for that 10% to get sold?
So first on the JV, so you have to understand one simple thing. These money, the amount of money which Genus has to invest in the JV, well, it has to happen in next 2 to 3 years. It is not going to happen in next 6 months. Almost around 500 plus is given by the GIC itself. Remaining, we have a very large working capital, as you always see, that because we have been doing business with the utilities, our working capital stuck up is very, very large. You will see a significant improvement in that. So a lot of money will get freed up from the working capital, and then there will be internal accruals. So this money, what we require is in next 2 to 3 years. So we are pretty comfortably sitting on getting that arranged. So I don't see any challenge in that. And your second question, can you repeat?
The 10% trustee, trust that holds in the company. When that gets sold, it comes to the company, right? The funds will come back to the company.
As on that, we have not decided anything on that because maybe we won't require any money in the company in the near future. If at all we require, we can take a decision.
But whenever the 10% gets sold, it comes to the company, right? Whenever, if you're...
Yes, absolutely.
Okay.
All right. So, final question then. The street likes what you're saying. The stock has moved to the high point of trade. So let's get a couple of more details out of the way then. Your order book right now is close to around 19,000 odd crores. What do you expect it to be by the end of this year? And your capacity utilization. You had around 10 million plus smart powers that you would make on an annual basis. You were looking to double it as well. So what is your current capacity utilization? When do you double it? 2 numbers on your capacity utilization and order book by the end of this year.
So by the end of this year, we will be plus 20,000 crores in terms of order book. It can be anywhere from 22 to 23. And in terms of capacity utilization, right now, we are at around 40-45% because as I've been saying in the past also, a lot of work has been decided recently and a lot of numbers will start coming in the capacity utilization will get much better from the Q4 onwards. So right now we are at 40-45%. We should be around, our capacity utilization will be 80-90% from next financial year onwards. And thereafter we'll look for the expansion of the capacity.
Okay, very quickly, receivables come down to what level since you've done this JV? I think they were 200 plus. Does it come down closer to around 100? Receivable days. Receivable days.
Your working capital days?
Yes, yes.
It will reduce significantly. Again, I don't want to put any number on that.
Got
but
it.
yes, with this JV and the way the business model has changed, the number this will improve significantly.
Okay, thanks a lot, Mr. Agarwal. We'll want a few more numbers, but maybe that for the next interview. Thanks so much for joining in and giving us those details. For the time being, slip in a short break, come back, continue our focus on markets. Well, thanks so much for tuning in to CNBC-TV18. Make sure you follow us and stay updated on all our social media platforms.